Good morning. Welcome to the State of the Market. I am Mark Sebastian. I am your only option. Reminder, we're here every day at 10 a.m. Eastern Time. If you're watching me on YouTube or X, give us a heart, give us a like, give us a subscribe, and or better yet, shoot us an email, support@option.com, and join the party right here. So today, as we come out the gate, Wednesday, just an abysmal day, right? Prior to the Fed, I mean, it was a really spectacular day of trading. Look at this, guys. So here we are, prior to the Fed, we're down as much as 80 points. We run higher. At our peak, we're up about 25 handles. So we've now made a 10-point move off the bottom, and then we immediately roll over and make a 130-point move lower. Yesterday, we talked with Andrew a couple times, and he promised you that we would get a 2% move out of the Fed over the course of the next week. Well, we've now gotten that 2% move in a single day post-Fed, and we're getting another move now reversing higher after the Fed. So there is all kinds of action. This is the perfect environment for two-way trades. S&P up about 80, Dow up about 0.6%. The NASDAQ leading the way, up almost 3%. The Russell down are up about 0.6%, and RSP down. Again, that's equal weight S&P, so that owns pretty much equal amounts of all the stocks. And you can see when that is a great gauge for what real market breadth looks like, and today's breadth is negative. I'm always a little nervous around that, but this rally is we're seeing a lot of strength in your names that have been kind of hammered. Micron was below $700, below $800, below $750 on its low, back to $800, kind of sitting where it was on, at the open of business on Wednesday. SanDisk, kind of a similar story. So memory looking strong. AMD finding a bid for the first time in some time. And look at the way this thing has moved out of for the first time in some time, maybe found a floor. I mean, look at this. Closes 430. It is gapped up $50. That is that's about a 10% move, folks, in a single day. Super healthy. I'm sure that's what you're saying. It's closed the gap. So interested to see if this is able to hold. VIX itself, it's down 2 points, 1830, about where it was at its lows when Warsh was talking yesterday. And the one thing to continue to pay attention to is the bond market, which, take a look. I mean, it completely rolled over on Wednesday and is not really rallying today. One of the things that Warsh said that was, I don't think the market's liked very much, and we're going to talk a little bit more about the Fed, but it was that, hey, look at rates trading without us raising rates. Those seem to be doing their job. So basically, he's saying the free market is telling us rates need to be higher. And I'm going to talk a little bit more about what happened with the Fed here in a second. And I want to close on looking at energy because the bombing continues. Now, take a look. We get a surprise attack, get a pop, and then we just kind of sit here. So the oil move is no longer the bond problem. I think it's the overall economy and inflation and government debt that is giving the bond market its issues. And folks, I'm not kidding you. We are at a breaking point. We are at the lowest level for TLT since October of 2024. And this would be a multi-year low, folks. I mean, I've got to go back. We're going back to June of 2015 That's how close to the multi-year low we are. We are at a breaking point. Any love the stock market gets, this starts to break down. So does the whole market. All right, let's take a quick look at where our earning stocks are, and then I'm going to jump more into the FOMC. So, Microsoft, great earnings, exploding higher, has exited our bear pitchfork and is now back into my bull pitchfork. And if you're wondering what my dates are, it's April 7th, 2025, July 31st, 2025, and March 27th, 2026. Microsoft is having a day. On the other end, Meta looks terrible. We're gonna have Hans here in a second. I'm very interested in where where is the level where you start getting interested in Meta? Not the only earnings. The one we had Qualcomm, which were bad. The one I want to focus on is Robinhood. Now, Robinhood is down. Down off earnings, has pulled back below 90. When they reported yesterday, they've had their most revenue off of option trading. I keep telling you, options are the dog, equities are the tail. Their second biggest revenue producer was prediction markets. They made more money off prediction markets than they did off stock trading. That should tell you a lot about the state of where prediction markets are right now. Okay, let's talk Fed. And I want to real briefly look at where the CME Fed Watch tool is now, because we're now looking at September. And coming out of the Fed, we have a 40% chance of no rate hike and a 59% chance of a rate hike. This is going to move around a lot over the next month and is going to present us with a similar situation next month. For the next foreseeable future, we are entering a path for Fed meetings that we have not seen since prior to the financial crisis. The last time there was this much uncertainty about what was going on with the Fed, all right, I was in my mid-20s, living the life on the floor, not even engaged, just met this woman named Lauren. And, Andrew's living in San Francisco, not on his island in Maine. This has been a while. Vaz was, I think, in high school. Just to kind of put these things in perspective, think about your life in 2006, 20 years ago. Right? No such thing as AI. If you want an iPhone, you have to be on AT&T's network. We're all using flip phones. That is the last time there was this much uncertainty around the Fed. It's obviously a different world, but we're going to have to go back and think about what trading was like. Fed days were huge days because we had no idea what was going to happen. Andrew's two-way trades got his 2% move in a single day. He is going to be presented with this opportunity every Fed meeting going forward in the foreseeable future. Till maybe three or 4 months after we get to some finality with the Iran conflict. We are in a changed market. And we're entering this changed market at the exact time that bond yields are exploding in the back end. Say it one more time, guys. It's a new world. It's a new world. The sugar high from the AI is over, and we're entering a world of uncertainty. There is going to be some real opportunities, seeing the rotation up and down between the stuff you can drop on your foot and the AI-centric chip names. That's a trade, and that trade is going to be there for a while. Let's bring on our guest. I want to get his reaction for the Fed, and then we're going to talk some more about earnings. We're going to talk about what happened last night. We're going to preview Apple and Amazon as well, and talk about maybe the other names we're watching. So with that, let's bring in our head of income trading and our official AI expert, Hans Albrecht. Good morning, Hans.
Good morning, Mark. Good morning, everybody.
Yeah, so I'm sure you heard what I was just talking about. The Fed, this is the first time we've been in a Fed situation like this since you and I were both floor trading at the time. So was Andrew.
Yeah, it has been a while.
I mean, yeah, we were all market makers the last time this was going on. I was 5 years away from having kids. Just a young buck. What was your takeaway from the FOMC yesterday?
We were in our party mode back then, right? We were in the have fun, party all night, go to work, and sling orders around on the floor. Those were fun days, and we had the energy to do it. I couldn't do that now. I have like
right about now. Like this weekend, like coming up 20 years ago this weekend, I would have planned on going out on Friday night. And when I got home, I would have expected my paper on my doorstep, and then I would have gone to bed. And yes, in 2006, I got the Chicago Tribune coming to my door every day. So, it was still a great paper.
It's funny. It's funny what you take for granted when you're young, Mark. I have a couple drinks now, and one of them's a Shirley Temple, and I have a headache the next day. So, so those days are over. But if you're trading, the high beta tech stuff these days, you've got enough of a headache. It is quite the world. Well, look, the Fed. I mean, look, I think a lot of people say that he didn't sort of display the sort of responsibility that he should have. And that's a little bit of a concern. I would have almost preferred. I mean, this was the biggest 38% expectation where nobody actually believed it would happen that I've ever seen. Right? It was a coin flip that literally nobody I talked to thought a hike was in the cards there. Maybe he should have hiked. Maybe you kind of get it out of the way. You do the kind of responsible thing that kind of gets you that credibility in a sense. Little pushback against Trump, and then you move on from there because in all likelihood you really shouldn't be raising rates. It's not going to stop the build out, right? So some of the inflationary forces we see out there, and we've said this for a long time, a year, that it's not going to stop a structural change in the what's happening in the world. You're going to continue to build out. Now there is a limitation to some of that at the margin. Certainly the level of rates, I think, starts to affect things a little bit. And to the extent, Mark, that I would say one of my worries, and we can talk about memory stocks and things like that later, but one of the things I do worry about is a bottleneck that a lot of people don't really think about, which is the bottleneck of financing, right? The sort of lending, the credit area. I think we can all agree there's probably, most people probably think we're at the low part of a very steep trajectory in AI demand, in compute demand, and all that stuff. But what's the build out going to look like as things get more expensive? We see the spreads widening, even for hyperscalers. People have lost confidence and patience with the spend if you're not kind of seeing that. And we talked about this the other day. You're seeing operating cash flow actually improve for the hyperscalers. They're doing well. They're actually monetizing AI for the most part. Meta maybe being one where you kind of question it because they don't have a cloud business, although they certainly seem to be building one now. But the problem is they keep spending and spending. So I think this sort of it's tough. spending.
Can we
that
take a
may be a
moment?
bottleneck. Yeah.
Can we take a pause just to think about how much Sheryl Sandberg mattered to Meta in keeping the guardrails around Mark Zuckerberg's whims? Clearly, she was the only person in the world that could stop him. Like, you know,
He's a maniac.
lean in.
Look,
What
he's
she
a
really
maniac.
did was stop Mark. What she didn't. She maybe leaned in. But you know what she did was stop Mark Zuckerberg from jumping over a cliff. That's really what she diving off the cliff into the unknown. Um, Now, one thing that was really interesting out of the Fed and really changed yesterday, major steepening in the yield curve. The front end of the curve came down, right? 3 month, 6 month, 12-month mostly flat, and then the back end, the 10-year, the 30-year, they stayed higher. That's gonna start to put a drag on things over the course of, not gonna do it in 3 months, but it will start putting a drag on, if yields stay this high, on a lot of investment and certainly a lot of the housing. So that's something I'm watching.
It does. You're right, Mark. And I mean, that's the Fed really doing. This is the new play, not that new, but it's a playbook, which is, you're issuing short end. You're really, really stuffing the short end full of paper, as opposed to kind of, going further out. So this is really the new world where, that's kind of how the Fed does things. But you're right. That hurts some of the areas of the economy. I mean, that's the problem with raising rates, is that as it filters through the curve, is that a lot of people are already struggling, and all you're going to do is make things more difficult for them. Okay, so iPhones had to go up a little bit because memory costs are higher. You're not really helping anybody. You're not helping a major engine of the economy, which is the housing market. You're not helping the average person that's seen costs go up like 50, 60% over the last few years, and they couldn't care less that inflation is heading towards 2%. Woohoo! I don't think a lot of people aren't exactly throwing a party over that. So it's very difficult. And then plus you've got the debt problems, right? Like, the US is sliding down a very, very difficult path from a debt perspective.
Indeed. So let's dip into these earnings. Microsoft up huge. Basically reaffirmed spend, didn't raise spend. Meta down big. Missed on earnings, pretty much in line on revenue. Didn't move spending too much, maybe guided a touch higher, but not very much. And then Hood, this is one I know you love to track. I was taken aback when prediction markets were the second biggest revenue source for them. And I think it shows where kind of gambling is going, and why the exchanges are racing to add their own prediction markets. What was your takeaway among those, and were there any other earnings that maybe I have not mentioned yet that caught your eye?
Well, I mean, I'm a big Hood bull, and it's pulled back quite a bit here. And we talked a few months ago about how that $1 trillion prediction market is there for the taking. And I think they've got the eyeballs. We did see it pull. It's not really bouncing today. It did trade down about $5 in the after hours, and it's not really bouncing. So I've got a lot of my position collared out, and I'm thinking of kind of removing some of that. But I think they're in a good position to. I think it's a very compelling buy-in here. As far as the Microsoft, the one thing that made my eyes pop out was Copilot, which is generally considered like a pile of what, went 30 million plus paid seats, up from 20 million in April. I think everyone's like, wow, what happened there? And so I think what Microsoft is, they're getting the benefit of the doubt as an ecosystem player here. And I have to admit, I haven't been super bullish. I mean, it's been wrong to be bearish on Microsoft and Meta for a year, which I've been, and bullish on Apple. But I'm impressed, right? I'm impressed. I'm going to be watching this stock. The cloud business doing well, and we know that in an infinite compute and token demand world, that should do well. And they are also an ecosystem stock, right? So like a Google, you have an ecosystem to push people. The problem with the models, Mark, is that they are being commoditized, and we see what's happening with Chinese models. Nobody's really going to make a ton of money on the actual models, but they're almost a loss leader. You know how you know how when a department store says, here, we're going to, we're going to give this product away, we put it in the pamphlet, people come in for that and then they buy other stuff. So that's kind of where I think things are going in general from the model side of things. And a company like Microsoft has more doors to push people through over time. So I think that's very interesting. And a lot of that gain, well, there's a gain on the Anthropic stake. But really, what I think got people excited is 90% of their cloud revenue came from customers outside the frontier labs. And that's good, because when people think of the open AIs and are they going to IPO, aren't they, are they going to be in trouble? That's a good number to see there. And then Meta, well, I don't know. What can you do with Meta?
That Azure number from Microsoft was an eye popper. And then Meta was this is just,
I actually, not a great day. I got a little excited about Meta, and I think Meta is in a kind of hell right now because, Meta investors, Zuck will be fine on his Hawaiian island, but investors are kind of going like, this is a great company. They're monetizing. Nobody really does advertising better. They own that world, but Zuck kind of wants to be, he wants a legacy. He wants to be an Elon, but he's just not as good as Elon with the moonshot ideas and the dreams and executing and all that. And that's just not the space that he owns. But it's an amazing business. If they could ever kind of turn off that tap, it will go to $900. Like, so it's becoming interesting. I'm going to get interested in it again. And before, I know you probably want to move on, but the other one that I noticed was Quanta Services. So this is my very favorite build out stock, and they put out blowout earnings. This PWR, Mark, as you know.
Oh, okay. Thank you.
Yeah, beautiful earnings. And this is, I believe that the Chinese models, that all this stuff is just a bunch of noise, and that this AI is nowhere near done, and we're just going to have more and more demand for it going forward. And I think that's positive for many areas of the build out. And I think this is a we are going to struggle with power. They maintain, they upgrade, these are boots on the ground. And I think these companies always get paid. So in a world where you're starting to wonder, are people going to get paid? You have no choice. I like the investments where I can kind of go, you have no choice. There's no guarantees. If I can think you have no choice, you have to have more memory. You have no choice. You have to upgrade the grid. Otherwise, we're going to run into another bottleneck. And so I thought those earnings were impressive.
So I do want to ask you a question. Then we're going to look at Apple and Amazon. We got a couple of minutes. We can run long here. So you mentioned a point. Meta investors are in a tight spot. There are a lot of people, such as myself, and probably a lot of people in the 300 plus in this room, who are asking themselves, okay, when do I get in? Is there a level where I look to buy calls? Is there a level where I have to just hold my nose? Like Intel had that moment, right? A year and a half ago, Intel had that moment where you held your nose and you bought it for $17 to $18. And lo and behold, it ran to 120, right? Good companies, when they're in the doldrums, right, they have those moments where you get that entry point that you might not ever see again. With Meta, is there a price point where you're going, all right, I'm going to buy some stock here. I'm going to buy some leap calls, probably leaps, right? And you're going to be looking at leaps would be my bet. Where is that level?
That's a tough one, Mark, because really it's not so much about fundamentals. That's what's sort of interesting about the story. It's not about the fundamental business. It's about something that's being done that makes the waters very very murky. And so I think it's an interesting buy right here. Now, what we tend to get with big sell-offs as well as big rallies on earnings, you tend to get a little bit of an echo, right? A bit of a follow through as the market drifts. You obviously have people who are getting out of this thing. So I think 500 could be a target. But I mean, I kind of like it around here because at some point I think they probably will stop. Kind of like, remember when it was $200 and they had the sort of year of efficiency and this big moment for Zuckerberg. and things kind of turn around. So I think valuation wise, it has to be interesting here. And you know what? If he's building a cloud business, I think cloud could be interesting because this is something I've been working on. But I think if there are bottlenecks in the physical aspect of things, which I think there's a very good chance of that happening because the demand is high, I think cloud businesses could be really good. They might actually have some pricing power in terms, because I mean, you know, if at some point it's difficult to find capacity, those with capacity could do well. So I'll have to give him some kudos there. Maybe he's onto something because he's already saying I'm reselling this stuff for really good at really good rates. So it's interesting, right?
You know, one thing I'll say is you can sell, and Hans, you're the income expert. I'll let you kind of think about this, but I just looked at the September 500 450 put spread, brings in $11. If you want to use the $500 price as as kind of your yield, then you're looking at over 26% per year, selling a put that is still 6% out of the money. If you want to look at the $50 margin on that, well, then you're talking about, you know, a 260% yield as opposed to a 26% yield. Is that kind of how you're going to approach, or are you going to go more like, hey, I want a huge upside here, so I'm going to go out to June of 2027, which I can't believe we're even talking about, but June of 2027, I'm going to buy some sort of leap call?
I don't think so, Mark. I think for me, and I use, as many folks know, I use the MTI. So I've got an indicator and turbo income, and I always look at that because we all succumb to the noise and the excitement of what's going on out there. But when I look at the MTI, it is not pretty on that thing. And so when it's not pretty, it's time to start thinking about, you know, coming up with a game plan. And the game plan usually is for a chart like this, where you're getting those nice premiums, right? We're seeing the vol compress a little, as it always does on earnings, but this is where you can take advantage of those income trades. When you want to push into the turbo trades is when you start getting that green, the yellow progresses to a green and then a strong green. And then that's where you kind of go, okay, listen, it's time to kind of step on the gas a little bit here because, you know, something like a Dell or whatever, you know, one of the names that I like is starting to get going. And that's where you want to sacrifice a little bit of that income, just a portion of it, and play that upside. So for Meta, it's either just buy stock and watch for stability, right? Stability is what it's all about.
All right. So you either buy stock and watch for stability, or maybe, you know, if you were going to use options, you'd lean toward an income play as opposed to as an upside shot play.
Exactly.
So there you have
your suggestion is terrific. And in fact, I just did that on PWR this morning, right? It's pulled back from it was up significantly. It's pulled back. I like it. And I don't think it's about to go up $200. I think this market is still grappling with some things. Like, as nice as some of these bounces are out there, we are just getting back to some 9 EMAs and some areas, some breakdown areas. So we've got a little work to do, and the market can certainly climb a wall of worry here. But this is really more of an income market in those names that you really, really have conviction in. The stuff that's kind of that tertiary, you know, that kind of secondary sort of AI stuff, the junkier stuff, I would stay away from that personally and focus on some of the strongest names in this kind of market.
All right. Now we've got a few minutes. We only got a couple minutes here. Let's hit on Apple and Amazon. What are you looking for tonight?
Well, the bar is pretty high on Apple. I mean, it's had, as we all know, it's had a really, really good run. Amazon's kind of in that world of, you know, they have to spend, right? So it's between a rock and a hard place, a little bit like a Google, maybe Microsoft to some extent as well, where, you know, I mentioned it at one point a couple of days ago. I said it's like having a gas station and going, you know, your customers show up one day and you go, well, we're all fresh out. Sorry, we got no gas left for you. And you maybe try again in a month. It's not good for business. So you have this incredible world for these guys where it's, in all likelihood, this incredible steep demand for AI, which means cloud, which means all the stuff they're investing in. So they have to spend on it, right? So I don't see I don't see Amazon pulling back on spending because they're a massive cloud layer out there. They're kind of the super highway of the world in cloud. And I think they need to keep spending. And I'm a little bit nervous about how the market takes that.
And then Apple's the one that never jumped into the AI game. I sat there and blasted Tim Cook for this. Up to right now, he looks pretty smart on his bet that AI would get commoditized.
It's amazing, isn't it? It's the anti-AI play out there. It's very much, and that's why I've liked it for quite a while, because it just always felt to me like they just had to wait for AI to come to them. They've got the ravenous customer base. They've got great products with wonderful margins. They've got these Macs and these Mac Studios and Mac desktops that are perfectly positioned for the agentic era. M5 chips, their GPUs, CPUs, all rolled into one. They really have everything going for them. The valuation is kind of insane, but it is one of those stories that is very, very strong.
I mean, I think part of the valuation in Apple has been a flight to safety on that one. I mean, would you rather own Apple's cash flows, or would you rather own U.S. Treasuries with $40 trillion in U.S. debt? Start to question whether Apple's a better play.
We know which one's done better. So, I mean, at this point, it has been like a bit of a savings account for people with benefits because it keeps going up. So it's just that solid company. I will tell everybody I sold 90% of mine yesterday and shifted into some things that I think are a better value. Can it keep going? Yeah, and I'll probably look for lower cost structures. That's where you want to follow Option Pit for ways to do things that are going to cost you less, right? I have a whole bunch of stock, I have high risk on the sheets on Apple. I'm going to get out of that, and I'm going to create that upside for a much lower cost. And that's the way you do it after a really big run in something. You don't want to miss more of that upside, but you also don't want to stick your neck on the line too much.
All right, Hans, I'm going to be live at 4:15 for earnings. I think they reached out to you and see if you were able to join me. Are you going to be able to hop on at 4:15?
Sure. Yeah, I didn't see that, but absolutely. I'll be there.
You want Hans's AI insight, you need to be right back here today at 4:15. Hans and I are going to be live for earnings, and we're going to have a great time. For those of you heard me talking about the Fed. You heard me talking about these huge events. We've got more massive earnings coming up. NVIDIA in a couple of weeks. Perfect opportunity. The special price that we offered on weekly profit cycles ends today. So if you want to join and be able to trade all these Fed events for the next year, remember I told you every Fed event is going to start turning into a 50-50 proposition until 3 to 4 months after the end of the Iran conflict. You want to join weekly profit cycles, you can still join for the week if you want to try it out. And then better yet, join for the month. Just $9.99. Try it for 14 days. It doesn't fit you, we'll give you your money back. We stand behind everything that we sell. Hans, can't wait to see you at 4:15. Thank you for joining me this morning. We got plenty to discuss tonight. So for Hans Albrecht, our head of income trading and AI expert, I am Mark Sebastian. I am your only option. We'll be back with you at 4:15, and of course, every day, starting at 10 a.m. We've got Garrett at 9:20 as well. So join that as well. So, folks, thank you for being here. We'll see you tomorrow, and more importantly, thanks, Amin. Have a great day.
Thanks, Amin. See you guys.